Tom Lee, urgent warning, do this ASAP. It's over. Let's see what Tom Nash has to say on the Tom
To
Nash
drop a
channel.
massive bombshell.
In the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here.
Pretty much changing his entire thesis about 2025. If you recall, just a few weeks ago, Tom Lee was saying that 2025 is going to be mild because we just had two incredible years, 2023, 2024. So 2025, while still bullish, is not going to be as insane. But now he just came out, and I'll show you the clip, and he just said that 2025 actually has more bullish tailwinds than even 2024.
Okay.
And that this is a buying opportunity of epic proportions. Essentially, what we have right now, all this extra red, all this blood on the streets we're seeing over the past few days, this is a buying opportunity according to Tom Lee.
Okay, so this guy's saying it's
is
just another dip
buying
buy.
opportunity in our view.
Things are still bullish,
2024
and it's a
has
dip buy that
proven
we
to
should
be a
buy.
year where the market's been strong, and it has eluded many opportunities for sustained weakness. I actually think this is, again, another chance to buy a dip.
And in all of my videos, the drill is always the same. I don't hold you hostage, which means I don't want you to buy nothing, click nothing, smash nothing, none of that. Just listen to me. So here's the bottom line first. You just got it, but now I want you to hear it from the horse's mouth, from Tom Lee himself, and then I'm going to break it down. I'm going to talk about my analysis of what's actually going on here. I'm going to actually puncture some holes in Tom Lee's theories because this is not an echo chamber. But then at the end of the video, I'll tell you my personal strategy for 2025. And based on what I've done for the past few years, you probably want to listen. So watch the video first, then the analysis. As always, I'll see you in a second.
This is not this is a Grinch rally or the Grinch sell-off. This is not a Santa Claus rally. It's not going as planned, Tom.
It's not. I think investors have been a bit nervous since December 18th, the FOMC rate decision, and worried that the Fed may not be as dovish as investors previously thought. But I think fundamentals have remained intact. So to us, I think this is a bit disappointing, but it's, I think, a bit of profit taking, some hesitancy around the Fed. But I think it doesn't really change that 2025 is shaping up to have a lot of tailwinds. One of the lessons of 2024 has been we've seen periods of market wobbling and weakness. We know investors get pretty quick to turn bearish when that happens, but it turns out that these have all proven to be buying opportunities. I don't think there's a lot of signal to me that December's been a weak month. It is obviously disappointing because it should be a seasonally strong period, but if we end down even S&P 5,900 into year end, I don't think it just changes that in 2025. There's a lot to look forward to. On top of that, we have an incoming administration that ultimately is going to be viewed by markets as pro-business, and I think that reignites animal spirits. And I think the Fed is going to prove to be dovish, even if they're trying to figure out where neutral is. They're still for I think upside for equity. So in the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here. I do think inflation worries are misplaced. I know there's a lot of folks calling for a resurgence of inflation, and I know for whatever reason January typically doesn't seem to be seasonally adjusted away, so we could see what looks like a surge in January CPI. But to me, the drivers of inflation are wages, and the Fed has said the labor market is not in a place that is inflationary. It's shelter, and we know shelter is really just catching up from the gap between where market prices are, which is not as inflationary, to how the statistical adjustments get CPI to where that needs to be. And we know auto insurance has really distorted CPI to the upside for the last few years, and that's cooling. So unless there is a supply shock coming, I don't know exactly why we would have a second wave of inflation.
You've been right on the direction of the market for a long time now. Tom, do you think the gains continue?
Yes, I think that there's a lot more tailwinds
so
building
this
for
pro
markets
is
in
very
2025
bullish.
than have existed in 2024.
This pro is very bullish, and this guy's one of the best analysts, Tom Lee. If you guys ever heard of him, just Google him. And I guess I'm going to listen to him too, blindly. I mean, I got a decent amount. I'm not going to trim the position. I've got 16K into VOO and a little bit of money in other stuff, but those are long-term, and the VOO is long-term as well. But we are buying at highs at the VOO. So I want to be careful. I have 50% in cash, 50% on VOO. And apparently, we should be holding this 50%, and I will add if it, chops a little bit lower, because nothing is just all the way up. Things usually chop. So I want to be patient. If I can get this at 533 a share on VOO, I will be very happy. But if not, I'm comfortable with the current position and the 10 shares I bought this morning. You can watch in my previous two videos that I made this morning. Let's get back to the video.
Better than I think.
For a long time now, Tom, you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed, worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year. I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit, where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well.
So the technology,
but you're right.
The technology is making the economy better, increasing income and everything. Yeah, okay.
Underperform the next 3 years or 5 years. So what we've done is essentially discounted so much bad news.
Sorry about that.
There's so much skepticism. I think almost everybody that talks about small cap says, well, they haven't worked, so they're not going to work.
Russell 2000.
They're trading at a 10 forward PE. They're going to benefit from deregulation. 49% of small caps are cyclical stocks, which are really primed to do well next year. So I think that the probabilities for a very good year are high.
Okay.
At a time when skepticism.
Russell 2000 is a buy. It is
isn't that
pretty
what
cheap right
FANG
now,
was
too.
at
Maybe
the
I'll
start
get
of
some as well.
2023? I remembered how many people said
Little
Maybe I'll get
dividend
some Russell.
stocks and
Let's
all
see what
the
he says.
safe, boring stocks dominated. If this is going to be a tech year, 2025 is going to be the U.S. stock market year, no doubt about it. Now, he actually says, look, if it's going to be a bad year, then obviously that other markets will overperform, but he doesn't foresee that. He's basically saying, look, when we have a lot of overestimation in the market, well, we have a lot of hype, a lot of overvaluation. When people are too optimistic, when there is euphoria, that is a problem, definitely. You'll find out that weakness leads to problems through the supply chains, through the had a lot of bumps, all peachy kumbaya.
Nothing is amazing. There's going to be chops, this and that. He's saying that anything could happen. Yeah, okay. All right, so that was a Tom Nash video. It was pretty good. But this guy, it's a lot of, negative 770. 25, this will make you, okay, it's over, okay. But yeah, so with what I'm gathering here, a lot of people are bullish on the stock market. So these dip buys that you are seeing today are discounted shares. I bought today 10 shares of VOO this morning at 540.25. This morning I bought 10 shares from $10,000 to $16,000 market value position. And the buying power is about 15K, about 16K in the position. So 50-50. I'm ready for a decent upside and to collect some profit if I see, maybe 560, 555, I'll sell some or trim, but we'll see. But if we have downside, this guy's wrong or whatever, I'm also ready for that. But I like to have a nice position in something that's safe, like an ETF VOO, not in something more risky. Check out the previous videos to get some more information. I post every day, basically. Like, subscribe if you like the video. Comment if you got any questions or need a stock analyst help. I'm not an analyst. I'm not a financial advisor. I'm basically talking to myself. Have a good one. Goodbye.